Today in this video we will talk about what Treasury bills are and the things you should keep in mind should you decide to invest in them. Simply put, Treasury bills, T-bills, are short-term debt obligations issued by the government. They are generally issued with a maturity of 1 year or less from the date of issue. T-bills are considered a low-risk, liquid investment with a fixed rate of return. To invest in this financial instrument, you can purchase them directly from the government at auction or through a broker. At auction, you can bid for them at a specified price. You can also purchase T-bills in the secondary market through a broker. Purchasing them through a money market fund is another viable option. T-bills are a great way to diversify your portfolio and protect your assets from market volatility, especially during these uncertain times. However, they do come with certain risks, such as interest rate risk and inflation risk. Hence, it is important to understand these risks before you do anything. So here are a few tips you should follow if you are interested in investing in T-bills. 1. Research the type of Treasury bills you want to buy. Decide if you want to buy short-term, maturing in 1 year or less, or long-term bills, maturing in more than 1 year. 2. Calculate the amount of money you want to invest in them. Consider the current interest rates, your budget, and your investment goals. 3. Find a broker or bank that offers Treasury bills. Make sure they are registered with the Securities and Exchange Commission, SEC. 4. Open a brokerage account with the firm. You'll need to provide some personal information and read and agree to the firm's customer agreement. 5. Fund your account. You can use cash, electronic transfer, or other forms of payment. 6. When placing an order to buy Treasury bills, specify the amount of money, the maturity date, and the type of Treasury bill you want to buy. 7. Wait for the order to be filled. The broker will contact you when the order is filled. 8. Monitor your investment. Check the value of your Treasury bills periodically to make sure it is performing as expected. 9. Sell your Treasury bills when the time comes. You can sell your bills before or after the maturity date. 10. Collect your profits. You will receive the proceeds of the sale minus any fees or commissions charged by your broker. 11. Reinvest the proceeds. Consider reinvesting the proceeds in another Treasury bill or another investment. 12. Pay taxes on your profits. You may be subject to taxes on any profits from your sale. Thanks for joining us for this overview of Treasury bills and investing in them. We hope you now have a better understanding of how these investments can play a part in your financial portfolio. Remember to do your own research and speak with a financial advisor before making any decisions about investing. Good luck! And before you forget, please like, share, subscribe, and comment on how helpful was our video and if there's anything more we can do to improve the quality of our videos. Until next time, take care and stay safe.